Hello, trading is closed on December 20th, 2018. We'll go over our calls in just a minute. I got my 1,000th YouTube subscriber today, so I think that's an appropriate time to go through some disclaimers. What I do here is give you my trading plan for the next trading day. It assumes there isn't a gap sharply in the undesired direction, and if there is, my plan gets thrown away. I can't guarantee it'll work. Anyone who trades it does it at his own risk. Now, we did cross a few of my targets off my list today. These were numbers I've been waiting to see since the summer of 2017, and there is support under the targets. Before we go into our calls, we have more disclaimers. Thanks to all the people who watch my channel. It's important to know that unlike other systems, MEJT gives price targets and support levels. It doesn't support resistance levels. It doesn't really give precise entries and precise exits. It's designed for use by knowledgeable traders in addition to, and not as a substitute for, other forms of technical analysis. It's nice to come up with numbers like this. My publisher says I can give the numbers, but I can't divulge how I arrived at them. All the information is in my book. It's priced at under $50. I don't have any $1,000 courses to sell. You can go to online booksellers like Amazon, look up MEJT system or my name. You can go to Harriman House online, buy the book for under one E-mini handle. It's a great gift for someone to buy for a person who has an interest in technical analysis of the stock market. It's a great gift for a broker to get for his clients. I think you'll keep him forever. And I don't recommend using my system or anyone else's system unless you fully understand it and try it on paper first. Other systems tell you about how much you make. I'm going to tell you how little you lose. If you never make a trade using the system, your number of losing trades should drop dramatically. And limiting losses is no less important than making gains. Now here, the market was falling out of bed. MEJT said there was support right here, said the move was false and prices would retrace. Now maybe you don't have any short position here to close out. Maybe you don't have the desire to go long when you're dropping like this, but at least the system says this is not a good place to enter a new short and get hit in the face with a move like this one. Okay, enough of my speech. There were a few signals today. Here was a MEJT +3 sell. It's described in the book. The system says the drop was false and price would retrace, which they did. Now, yesterday's call was for lower prices. We had a target of 24.37. Now, the low of the day in cash was 24.4118. That's pretty close. Now, MEJT targets have to print in regular trading hours or they're not satisfied. But we showed yesterday how we came up with that price. It had nothing to do with the MEJT system. It had to do with other forms of analysis. Now, usually, futures and cash trade hand in hand. Sometimes when the fast market, one gets ahead of the other. The low in futures was 24.4150. Fair value is 6.16 handles under that. So the low in regular trading hours was 24.3534 cash, roughly 1 2/3 points away from the target, and that's close enough for me. Now, today's pattern is mixed signals. And typically when that happens, the commonest thing is we gap outside of the day's range, which is what I think will happen. Next most common is we close little change, and we have the big move the day afterwards. And the day afterwards is Christmas Eve. I don't count that one. It's next complete trading a day afterwards. So it's positive that we gapped down, hit a lower low, couldn't hold on to any of the lows. Should lead to higher prices unless we invalidate it by gapping and promptly taking out this low. This is a pattern which almost always closes near the day's high. If it doesn't close near the day's high, it's negative unless it's invalidated by gapping and promptly taking out these highs. So the commonest thing is to gap and promptly move outside of the day's high. Let's take a look at the target. This is 24.37. It's probably close enough. We're thinking there's a good chance this is the end of this leg down. This is E-mini volume. When you trade over 3 million contracts, tends to mark a price low. You can see the last time we traded this many contracts was right here, right here. So we have corroboration that this could be not just a price target, but it's also a volume spike. Now, how high do we go? Well, here's the FOMC announcement. The first move usually tells you where you're going to go, and that was up. Then we drop, and then typically you go over the FOMC announcement price by an amount greater than the amount you would enter it. That would indicate a big rally. I think we'll have a rally, but not that big. I'll tell you why. Here's the weekly chart. This is a TDST line from way back here. Note how we got support right under the TDST line. The 89-week moving average usually separates markets going up from markets dropping. The average moves, but I don't think we're going to trade significantly over the price of the 89-week moving average. We have support from that TDST line. Look at the daily chart. Another TDST line is right here, so we have support from that too. So we've dropped to support, but not through it, to a target, but not through it. We couldn't hold on to the lows. All it would take to convince me that this low is going to hold would be to gap and promptly overtake these highs. And if that were true, that's not what I want. If that were true, there'd be a very strong possibility that the first leg down of this market has ended, and we're going to have a rally which probably won't go much higher than the middle 2600s. But if you're a nimble trader, that could be enough. Tomorrow's pattern has the early low. It doesn't mean you won't gap up first, and that's today's call.